Hi traders, this is Mike Hamilton from Trade Easyway with a short, succinct appraisal of where these markets are as we head into this week. Data this week is dominated by services data across Europe and the US. UK job status tomorrow, so we're looking for a poor week number on the UK jobs front. But let's just stick to what the charts are showing us at the moment. So you're looking at the daily Nasdaq. This was September's lows and January highs, and at the non-farm payroll numbers on the 5th of March, we hit the 50%. This dotted line to 50% and bounced. So we subsequently, you can see we've got a 1, 2, 3, 4, 5 bounce into what's now become a major neckline. So we've got a shoulder, head, shoulder. I think the most likely scenario is we'll crawl back into this big sellers bar here from Thursday, potentially halfway up, and then possibly get another leg down. So that's one scenario. One scenario is we leg down and then build. Another scenario is we just keep closing higher this week, get above that Thursday drop zone, and then march back up. It's a very bullish chart. This is why I'm talking about the upside of this. The main thing is if we now switch to what we're seeing on the Dow. On the Dow we saw some pretty heavy selling Thursday, Friday last week, but all we've done is come back into this key trend line that's sitting across the top. So it's a huge move from March the 5th, three-wave move up here, and now we're getting a pullback, but still somewhat disconnected from these averages. So the 20 and the 89 are sitting down here, and every time you get too far away from the averages, it tends to pull back and reconnect. So I wouldn't at all be surprised to see that push into something like 32,800, 33. In other words, back into the Thursday area, and then potentially come back to find these averages before, if we are going to get another leg up, then I think that's where it's going to come from, back here. So I'm suggesting at the moment that we get some deeper pullbacks. However, if this initial Monday open, which was a little bit of a crazy open, we dropped hard into the open, I'm talking about the European Open, and bounced right up, then all this selling from the second half of last week could be overcome if we can close above 33 and breach that all-time high 33,200. But short term, I think this is lower. In a bullish, even in a very bullish market like this, you still need to wait and consolidate until these averages catch up. For now, relate that to the DAX. You can see another really bullish chart. So we spent a long while in this box, came out of it, all the dips were bought, broke up, huge breakup here early March, and then we just did it really. We just waited until these averages are going to catch up. So I still think this needs to, in a bullish consolidation, it's quite normal for this market to dip before it's ready to get another leg up. If we're too bullish for that, then these dips down here could get bought. This is a bullish consolidation here. This is what I talked about way back here. You know, big leg up, struggled to get through this, so eventually dipped here end of February to reconnect with this 89-day average, and then we sped up. I think the same is going to happen. I think we could end up consolidating until we get a tug down, which I then think will lead us to get back up to 15,000. If I'm wrong, we'll continue to close higher here and then eventually gather some speed, momentum up to 15k. All right, so coming into April, May, we could possibly get back up here. But like I said, if this bullish scenario plays out, we will get a substantial pullback into that area. The dollar has gained strength last week, and I'm expecting further strength in the dollar. So this is looking at the gold daily chart here. So this big push up I think will be met with, we're already meeting a lot of weakness, a lot of resistance up here. I think we will potentially retrace to 1700 again on the back of that strong dollar, because it's a divergent relationship with the dollar in a normal healthy market. So if that pulls back to 1700, I think we can then get to 1770 and then potentially wind up to 1800. I am expecting, I think this is the year that inflation really rears its head again, and we end up in mid to late autumn around about 1.72% in the US. We've got a very bullish commodity market with anything from grains, metals and energy pushing up. Oil has had a substantial pullback last week. Let's have a look at that now. So you can see oil really had a series of lower closes here, lower highs, and then eventually just rolled back into this 59.75. I suspect we may bounce around here a little bit. I think any push back into this Thursday drop zone could be sold into, and I think we will come back and potentially find 55 and who knows, even 50. Do a full retracement back down to that $50. So the strong dollar is basically seeing these commodities run for cover. As a substantial 1, 2, 3 wave drop, any fourth wave into this resistance, I think we'll see that drop over the coming weeks and months, potentially all the way back here. I mean, the oil has been on a huge run from what was a negative number right up to 67.85. So yeah, we are due a pullback. The invents support. All right. When we did our normal Sunday night review, the stocks that stood out for potential buys were the miners. This is Pan African. So we've already had a push into, this looks about 18.5, 19. We dropped back to this key support area. If we can close above 18 in the next couple of days, then I think we can at least wind our way back to this 20 plus. And ultimately, if I pan back from this, you can see we were up there, we got that 27. Okay, so that it had a great run from 8.5 up to 27 on from April to July last year, and I think that could potentially get repeated as we get this season underway. I also like POG, so that's PAF, this is POG. Yeah, this is a less favourable chart. This is a much messier chart, but the same applies. If we can hold this 25 and close above 27, I think we could wind up to the 41. All right, if we look at a couple of stocks that I talked about before, this is IQE. I bought just over the 70p mark. It dropped to 68 to 67.80, but then bounced. So we've seen 75. We're currently underneath this resistance here with a big sell bar on Friday. But at the moment, I'm not too concerned about this. They got earnings on the 25th, which is Thursday. So we had a 1-2 wave pullback. If we can close above this 75, then I think we can go back to 90, potentially higher. But I admit there's a lot, we had a good run here. But there's a lot of, it's had a deep pullback. There's a little bit too much red on the chart for the moment. But if we can close above this 75, particularly into Thursday close, then I think we're higher. It's obviously riskier trading this into the earnings. So if you're not in this, I'm in this with a stop underneath these levels down here, remember the 64p mark. If you're not in this, you are much better off just waiting until we get Thursday out of the way. If it gaps up, You just need to be patient and buy a pullback. But if it gaps down and you're long this, then you could get hit. So the best thing to do with something like IQE is either manage your risk if you're in it, or stay away until a potential extreme move on the 25th is out of the way. Alright, so I'm interested in Pan African and a couple of other miners, and that goes for US mining as well. Kinross Gold is holding up, and Hecla, the silver miner, HL, is doing well. And so that's what I'm looking for in this one, and IQ. In contrast to that, have a look at Barclays on the LSE, London Stock Exchange. This is going great guns. So we've had this bottoming pattern down here. So we were as low as 72.80. So we did a 1, 2, 3, 4, 5, 1, 2, 3 wave pullback, then another 3 wave pullback deeper into the support, and then we've just done this lovely wave, strong wave pattern. We're sitting above this major resistance area up here, so this is why I'm bullish the markets. I think the UK stocks have been very resilient when the US was pulling back last week. So on the face of it, as I said, this is overall a bullish market. We are just at that period in the cycle where we have seen some profit taking. Some of the data has spooked the market, particularly in the US, and seen some deeper pullbacks, but overall the outlook into next month, back end of March and April into May, is still bodes well, and this is normally the best time to invest, to be in stocks, and expect some higher numbers, but just be very, very vigilant because it has been very volatile. Alright, lots of events coming up, and another review coming out midweek, so I'll be in touch, and stay tuned.